Hey guys, what's up? Welcome back to the channel. Welcome back to Paper Trades. So yesterday, guys, we had a very exciting 24 hours, right? So I'm hoping you guys watched yesterday's video because I was beyond accurate in that video. I am like so glad I started this channel and want to help everybody here. So I hope you guys are paying attention. And I appreciate the subscribers that subscribe so far. I know it's super new, and I'm not making videos every day, but I will try to make as many videos as I can in the week. For you guys to keep you guys updated on this market. So let's get straight into Bitcoin, right? So yesterday we were around this area here when I was making the video, right? So let's go back. Let's take a look at the daily chart and let's take a look at the daily chart, right? So on the daily chart, right? Let's go here. Let's go back to this yesterday's video on what I was talking about, and let's talk about it here. So I'm gonna just press play. This is my channel. This is yesterday's video, or technically today for me. It's still not midnight yet for me. I stay in Los Angeles, so but the chart, since I make it kind of light, it's 9:30 p.m. right now. So for like everybody in Asia, the day's just starting and stuff. So I guess I'll make it for a 24-hour period. But let's take a look at this like last minute, 2 3 minutes of yesterday's video and what I say right here. And most likely we're gonna uh, keep going back down. But it looks right now, temporarily we might have a short-term rally, how everybody is calling it. I didn't believe that the short-term rally was possible. That's why I'm still kind of a skeptic. I'm really watching this area right here. I would be paying attention to this all day tomorrow. We might get completely psyched out tomorrow, 100%. We might, let me get my paintbrush, which I love to use. We might kind of shoot up here super fast and then kind of close below our 55-day exponential moving average. So tomorrow is going to be or today, because we're on today's candle. I'm taking tomorrow because, I stay in the States and I think this is just opened a new day like 3 hours ago or 4 hours ago. Um, so we must stay above this, you know, uh, yellow 55-day exponential moving average. But let me know your guys' thoughts. Sorry for ranting and shit, but okay. So if you guys watched yesterday's video, I kind of broke it down that we needed to stay above this 55-day exponential moving average for us to show support of more bullish movement, right? So at this point, it's kind of very, very critical of where we might go. As you can see, look at let me just clean this chart up a bit and move everything aside. So I did draw I am drawing a Fibonacci retracement line. So if I could do it from here, it's kind of the same way, but um, let me do it from the breakout, right? So from the point of the breakout here, or we could actually even do it here if we want to be more bullish. So more towards the bullish side, but usually I'll do it from like the bottom. Since I play like really long term stuff, I do believe that we might be coming back down and retesting our area of support and making um, new sideways action, right? Because technically, anything over 20,000, we really don't have any history based off the charts, right? We don't have any sideways action, so this is kind of good for Bitcoin that we're moving around this range because it's making new supports and new resistances. So, in my perspective, if we break below 21,000, that would show a clear sign of a strong support, line for Bitcoin, 21,000, right, for the bottom to reset, because this is a really hard rejection, as you guys can see here on yesterday's candle, exactly how I mentioned in this video here that I made yesterday, right? Um, this is exactly how it's playing out. And if you guys watch yesterday's video, it mentions that if we break below that, if we were to break above it, then I would say we were going to be shooting to the moon, right? But right now we need to cool down and we need to recover, recover. And as you guys can see, we broke another area of support right now. So we can know what does a lower low mean, right? A lower low means we're gonna keep going lower. So yesterday, we made a new lower low. Sorry about that. Um, so I put this orange line here for a reason, right? Like this, if you guys see, let me go down to the 4 hour, right? If you guys see this orange line, I put it down for a reason. We made a new lower low, right? So now that support line now becomes a resistance, right? So now we need to break above this resistance line and show support again within this 23,000 area. But right now we actually broke back down to 22,000. If you guys watched yesterday's video, I mentioned that if we break below, this area of support, we're going to retest for sure 21,000. Like that's like the zero point 0.5 area um, to me shows more of a support area for bullish movement, right? Um, Around this zero point 0.5 Fibonacci level, right? If we break below the zero point 0.5 Fibonacci level, as you can see here, this is a strong area of support. So I think we might get a bounce and maybe retest our 0.38 Fibonacci level again before we might come down and retest our 21,000, 20,700 area. But this might take a while, right? So this might take a few days um, for uh, a not a bearish momentum. As long as we stay above this line here, I don't think we have bearish momentum, and I think the the outline is still positive, right? So this line right here, let me even make it bigger and kind of blue. Let me make it blue and let me make it bigger. Right, so this line here, I have a feeling that if we stay above this area here, above 21,000, 900, 21,800, and if we don't break this area here, we might even wick down to 21,500. But if we stay above this area, to me, shows bullish signs. It remains bullish in my perspective, right? So we might do something like this, right? We might drop back down. Let me get the paintbrush. So we might drop down to here, wick here, and then start bouncing back up this area, and then maybe shoot for retest for higher highs, right? For again for higher highs. That would be the positive. That would be a positive momentum for me, because at that point it would allow our 55-day exponential moving average to come down a bit, right? To come down to about 23,500, right? So it's going to allow everything to keep coming down a bit. So that's how I see this playing out, right? And what do we have here? Will show a bounce exactly where I told you guys. Oh my God, that's why I love exponential moving averages and Bollinger Bands, because as you guys can see here, I did this before I even turned on the Bollinger Bands, right? So that's another confirmation for me, right? This is another confirmation for me that we might bounce off the zero point 0.5 um, uh, Fibonacci retracement, right? So how did I do this Fibonacci? I just took it from the bottom, right, to the high, to yesterday or today's high, right, and that's where we're at. So I turned on the exponential moving averages, right? So what did I say? Yesterday's video. If we get break, if we don't break above the 55-day exponential moving average, and exactly what happened, exactly what happened today happened, right? So we went above it, we went back down, we closed below it. So now to me, we're gonna retest. We're gonna come back down to our to our 8 exponential moving average, right? If you guys were with me yesterday, I talked about exponential moving averages and how if we are usually above it is when we ride the 8 exponential moving average. So as long as we do not close below the 8 exponential moving average, which is around $22,000, 21,800 to around 22,200, so around within this $400 range, right? again, we might wick down. We might wick down to 21.5, right? We might wick down. As you can see, we do get wicks, right? So, but these are fast movements. As long as we stay above the zero point 0.5 Fibonacci level or the zero point 0.5 Fibonacci level, right? And kind of break back up to 22,400, to me will signify good signs of support. Um, you know, but as you can see, the Bollinger Bands are really extended right now on the daily chart. So as I told you guys, if we do not find support right here at the middle line of the Bollinger Band, which lines up to our golden pocket Fibonacci retracement area, right? So if we were to break down below this area here, right, to me it will break the rally. We will be going lower and probably break below our current lows. But again, as long as we see this, we want to see this right here. We want to see this area here of support. We do not want to see kind of us falling down. So again, we want to show support at the 8 exponential moving average, right, which is right here around 22,300, right? If we do break below that, then we are going to retest. Um, if we break below our support and just say we break below 21,400, yeah, we're going to retest 20,000 for sure. That's going to be a for sure. And if we break below, again, if we break below this Bollinger Band, the right exactly lining up to our 20,000 area with our golden pocket area, right? Right. Okay, let me go back to. So if we break again, we break below this area here, you know, we're gonna come back down. We must show support at the 8 exponential moving average. So really bullish again, really bullish, possibly going even higher. You know, bam, 0.382. And we could break it down. Look, the daily is beyond oversold on the stochastic RSI, and you guys can see that straight out. Whatever goes up must come back down, right? So I have a feeling that we're going to come back down to the 8 for sure. So that's 22,000. We're going back down to 22,000. That's to me that is a for sure, and I will be writing this wave down, right? So yeah, so I am shorting a few cryptos today. Um, but yeah, that's just on me, right? And like I hope these lessons, are really valuable. I'm showing you guys what I'm doing. This is how I'm trading, and I'm not a big trader. Like I'm not like what I mean by big traders. I don't put a lot of money down, right? Because I can make a cool amount of money with small moves, and usually I'm a long term hodler. I hate paying attention to the charts, but when I do pay attention, I do go in depth. So I really hope this really helps out. And as you guys can see, like let's take a look at our 1 hour chart, right? Really oversold. We're below the 50% mark now. We broke down below the 50% mark, which signifies what I mentioned before. If we are below on the RSI, if we are below the 50% mark, and we stay below the 50% mark, then we went back down to bearish movement. So next time the stochastic RSI goes above the 50% mark and the slow RSI stays below the 50% mark, then I would signify as a trend reversal, right? We are going back down to a bearish momentum, right? Look at here. If you guys see here, we are broke below the 55 day exponential moving average on the 1 hour chart. I have a feeling we're going to retest um, the 200 exponential moving average on the 1 hour, and it signifies right there exactly where we made our our daily, right? Our Fibonacci retracement levels, right? Where I mentioned that we might bounce back up. So this is really good, right? Let's go to the 4 hour. On the 4 hour, again, we are retesting our 200-day exponential moving average. Um, that's why I mentioned this stuff, like right, like look at how close this stuff is lining up to what I mentioned, right? And look at right there where we have our two really good pocket indicators. So usually once we break down below our 8 exponential moving average, we're going to retest our 55 and then our 200. But since right now we are above our 200 exponential moving average, that's why you see this little great pocket. So again, we must bounce off this area. Let me just move this. We must bounce off this area, show support here around this area here, and climb back higher. But that might not happen, and we're gonna retest, right? So we might just kind of do this, right? So we might just probably do this retest here before we come back down. So if you guys see that little motion, then if that does happen, if this right here does happen, what does that look like to you guys, right? That looks like a potential head and shoulders if that is forming on the 4-hour chart, right? This would be our one shoulder, our head, and if we bounce off this area here and we come back here, go back down, that would signify our second shoulder. And if a lot of things, If you guys were paying attention yesterday, um, I mentioned that we might have it was what was I claiming? The Fibonacci extension, right? It kind of played out exactly how I mentioned. If you guys go back to that video, you guys will see the Fibonacci extension video, which I did this was wave 1, right? Wave 2, wave 3, wave 4, and wave 5. So if you guys watched yesterday's video, that's exactly how we played it, and that's exactly how it was. And I think we might see an ABC correction here. So again, we might see this. We might see an ABC correction. Let's go right. A, B, C. Bam. So that's what potentially might happen, right? With the ABC correction. And again, that lines up with the head and shoulders pattern as well. A lot of things could happen here. So that's going to be for today. I hope this video actually helped you guys kind of pay attention a little bit more. Watch yesterday's video if you guys just want to learn, because this is just strictly a learning channel, right? Like kind of showing you guys all these things, and as I use everything more and trade live more, I will try to like tell you guys and show you guys how these play out a little bit more. And yeah, so this you know, go back to the 1 hour, kind of played out really well on the Fibonacci, on the Ellie wave, right? And the 55-day exponential moving average, also using your RSIs and everything in this area here. So that's pretty cool in my opinion. Let me know what you guys think. Have a good one and peace out.